What if the next financial collapse isn't an accident, but a reset? What if everything you're seeing right now, inflation, tech layoffs, rising debt, even digital convenience, is part of a single, carefully engineered plan to end money as we know it by 2030? Because according to leaked policy documents, quiet partnerships, and strange pilot programs popping up across the globe, the elite aren't preparing to prevent the next crash. They're preparing to own it. It's called the Great Reset, and it's not a conspiracy anymore. The pieces are already on the board: central bank digital currencies, global debt restructuring, and sustainable finance narratives that sound good on the surface, but hide something darker underneath. By 2030, the world's largest economies will be tethered to programmable money, where every transaction, every paycheck, and every purchase can be tracked, taxed, or even terminated. But to make people accept it, they need chaos first. They need collapse, because only when the system breaks can they sell you a new one. Before we unpack this, I want to know, where are you watching from? Drop your country or city in the comments. Let's see how global this community of thinkers really is. And if you're new here, hit subscribe, because what you're about to hear is the unfiltered truth. Let's rewind. The year was 1971, the day the global economy changed forever. President Richard Nixon ended the gold standard, cutting the final link between real value and paper money. Overnight, the dollar became pure credit backed by nothing but faith and debt. From that moment on, the economy became a casino. Every crisis from 1987 crash to the dot-com bubble to 2008 was fixed the same way, by printing more money. Sound familiar? The pattern is simple: inflate, crash, rescue, repeat. But with each cycle, something else happens. Power concentrates upward. By 2020, the top 1% controlled nearly half of all global wealth. By 2023, global debt passed $307 trillion, while real wages stagnated. And when inflation hit, who got bailed out first? Banks, corporations, and governments, not you. Sound familiar again? It's the same playbook, just with new branding. Back then, they called it stimulus. Now, they call it sustainability. But here's the hidden link no one talks about. Every rescue increases dependency. Every solution tightens the leash. Remember the 2008 crash? It wasn't just a financial crisis, it was a blueprint. The system broke, and instead of fixing it, they replaced it with something more controllable. The Federal Reserve expanded its balance sheet from $700 billion to over $8 trillion. That's more than a 1,000% increase in just 14 years. And while they told us it was to stabilize markets, what they were really doing was buying the system itself. Corporations, bonds, even housing. Every time the Fed or the ECB steps in, ownership shifts further upward. Now, fast forward to today. The IMF, World Economic Forum, and central banks across 100+ countries are rolling out a coordinated campaign for central bank digital currencies. They call it modernization, but what it really is monetized surveillance. Because unlike cash, central bank digital currencies aren't money. They're code, and code can be rewritten, restricted, or reversed. Sound familiar yet? You've seen this before in China's social credit system, in Europe's carbon trackers, in America's bank freezes during political unrest. History doesn't repeat, it upgrades. And right now, it's upgrading towards something called programmable finance, the ability to control money itself. But to make the switch, they need an event big enough to justify it. A collapse so deep, so global, that the public begs for a reset. That's where the 2030 plan comes in. Here's the twist. The 1% aren't waiting for the next crisis, they're engineering it. The mechanism? The global debt reset, a coordinated effort by central banks to intentionally crash over-leveraged debt markets, wipe the slate clean, and rebuild under a digital standard. The Bank for International Settlements, the central bank of central banks, has already admitted this quietly. Their 2022 report spoke of a coming synchronization of monetary frameworks to ensure financial stability in a multi-central bank digital currencies world. Translation: one crash, one solution, one system. And it's not a theory, the architecture is already live. The IMF's digital SDR, or special drawing right, is a prototype global reserve asset. And the G20 has publicly backed cross-border central bank digital currencies interoperability, a single digital standard for all nations. But here's what makes it sinister. In this new system, your money isn't really yours. It's a license, a permission slip. If your carbon score is too high, your spending could be limited. If your behavior is flagged, your access could be paused. And all under the banner of saving the planet. Because when they say sustainability, what they really mean is sustaining control. Now, here's where it gets chilling. The people building this system, the architects of the 2030 reset, aren't economists. They're technocrats, unelected officials, and bankers in partnership with big tech. The same companies that track your clicks will soon track your cash. The same institutions that failed in 2008 are designing the next collapse. And the man behind it, you won't believe the name. The receipt is wilder than you think. Let's break down how this works and why it's inevitable. First, understand the trap. Global debt has grown faster than GDP for over 40 years. For every $1 of real growth, we now generate $3 to $5 of new debt. It's mathematically impossible to sustain, and they know it. So instead of solving the problem, they're planning to redefine it. Under the new model, debt won't be owed in traditional terms, it'll be tokenized. Governments and corporations will convert liabilities into digital assets, wrapped inside blockchain-like systems controlled by central banks. They call this the Debt Tokenization Initiative. It sounds modern, efficient, clean. But here's what it really means: ownership of your nation's debt and, by extension, your taxes, your inflation, your labor will become programmable. In other words, they're turning debt into data, and once it's data, it can be deleted, manipulated, or reissued at will. That's the 2030 plan in a nutshell, a controlled implosion of the old system, replaced by a programmable one. Let's visualize it. When the 2008 crash hit, banks failed because of bad collateral, worthless mortgage bonds. When the 2030 crash hits, banks won't fail at all because the collateral will be digital. They can simply recode the losses. Imagine this: a $100 trillion global debt wipeout, instantly converted into digital credits under a stability framework. No defaults, no riots, just reset. It sounds insane, but it's already being tested. In 2023, the Bank of England, European Central Bank, and Federal Reserve all piloted central bank digital currencies systems with identical interoperability protocols. That means they can talk to each other instantly. It's the first step toward a global financial intranet. And while they claim it's about efficiency, the code itself allows conditional spending, meaning if you don't meet the right criteria, your digital wallet can be throttled or denied. Here's the emotional bait they'll use: debt forgiveness, universal basic income, carbon credits, digital safety, each a shiny hook masking the real agenda. Remember the Great Depression of 1929? That crash consolidated small banks into giants. Remember 2008? That collapse transferred wealth from homeowners to hedge funds. 2030 will be no different, except this time, it's digital. And the scale is unprecedented. Over $300 trillion in global debt. 70% of all transactions already digital, 90% of central banks developing digital currencies, and a projected 60% of global GDP to be tokenization by 2030. Every metric screams the same warning: the next collapse won't destroy the system, it will complete it. That's why they're not panicking. That's why inflation, debt, and political chaos don't scare them. Because collapse isn't the end, it's the launchpad. When the dust settles, the 1% won't be counting losses. They'll be counting permissions. And this isn't speculation. In March 2024, the IMF announced its digital currency interoperability platform. Its goal? To create a universal framework linking central banks, governments, and payment providers under a single programmable standard. Translation: one button, global control. This is how the 2030 collapse will unfold. First, a debt shock triggered by rising interest rates and sovereign defaults. Then, market panic, banks fail, currencies drop, and liquidity vanishes. Next, the rollout emergency digital wallets for stability. Finally, integration cash phased out, freedom replaced by permission. And by the time people realize what's happened, it'll be too late. They won't need to confiscate your money. They'll just turn it off. Here's the truth. The collapse of 2030 won't look like chaos. It'll look like convenience, instant payments, digital safety, global stability. But behind the screens, the code will decide who gets to eat, travel, or invest. The elites won't need armies or elections. They'll have algorithms. This isn't about wealth anymore, it's about obedience. The financial crash isn't coming despite the new system. It's coming because of it. Because only through crisis can they reset control. And make no mistake, this isn't just a theory. The architecture is already built. The pilot programs are running. And if history teaches anything, it's this. Every system of control begins as a system of protection. So when they say, it's for your safety, remember what that really means. We are entering a decade where money will no longer be a symbol of freedom. It will be a measure of compliance. So stay alert. Stay skeptical, and stay connected, because questioning the narrative isn't paranoia, it's survival. If this opened your eyes, share it before the next update makes questioning impossible.